Hey everyone, my name's Andy. My channel's Finding Value. I'm going to do a ratios update, so we're going to jump right in and talk about ratios. So this is a ratio update. The first ratio is the Dow to gold ratio. We're still tracking sideways in this channel. We have not broken to the downside, but it looks like we've got a shoulder, head, shoulder possibly forming, and maybe we'll see this decline soon. We'll see. Time will tell. Here's gold to copper. Copper was outperforming gold, and now we're kind of going into the sideways pattern. Is this going to break to the upside, downside? We're going to have to see. We do have a bullish engulfing right here. Typically, that means that we're probably going to go to the upside. So we'll probably see gold outperform copper at some point in the near future. I also see another bullish engulfing kind of right in front of it. So that's what I would expect soon. Huey to gold ratio. So typically, the Huey goes up when gold stocks outperform gold. Right now we're in this sideways pattern, chopping sideways, and eventually I think in the short term the Huey is going to outperform gold, which this is going to go higher here, this ratio. So that's what I'm expecting on the first half of this bull market, is that the gold mining companies will outperform gold for a couple years, and then we'll have to rotate out and go into the physical precious metals itself. I'll get into that in another clip. This is gold versus oil. Oil has been outperforming, and this ratio has been declining. We broke out of this big channel pattern, and we're starting to come and track down. It's at 39 barrels to 1 ounce of gold. It means that oil is extremely cheap, and historically, this is absolutely historically cheap for oil. Next, we've got oil to natural gas ratio. We're going in the sideways pattern here. We're kind of at the upper portion of the channel. I'm guessing over time natural gas is going to remain probably range bound for a little while. That's my guess, until the end of the commodities bull market. Here's gold to platinum ratio. Platinum broke to the downside, which means platinum's outperforming gold. We're in this little pattern here. It chopped up to the top side here. I think that's a false breakout to the upside. I think this is going to continue to go lower over time, which means that platinum is going to outperform gold, in my opinion. Here's gold to silver. Silver broke to the downside. We've got this other, call it support or resistance if it's going down. This resistance area down here, I think it's going to break down to the downside. It's at 71 ounces silver to 1 ounce gold, and this is going to break to the downside, I think, eventually, when gold and silver continue higher in the future. This one, I've got the 10-year Treasury. You can see that we've been in an uptrend. We can see a bunch of, it looks like little pullback here inside this big up day. So I think it's going to continue to go higher unless the Fed steps in and does some sort of their money printing magic and buy a bunch of bonds with QE, which they said they were going to do. So we'll see what this looks like. And here's the dollar. Yeah, we've got tons of deflation going on with the dollar doing this. Down, 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 and I don't know, probably in the toilet or something. I don't know where this thing's going, but it's definitely not higher, at least not in the short term. So what I see is gold, at least today it was down, but it looks like my expectations is gold is going to move to the upside, silver is going to go up, platinum's going to go up. All these commodities are going to continue higher in a bull market of commodities. And we're going to see real estate go to the upside. It's going to continue to go, I'm going to say this, higher, higher, higher. And that's going to be inflationary for the environment. That inflation is going to push our commodities to the upside. And the commodities are all cheap in relationship to all of their assets. So we're going to see money rotate out of all those other sectors eventually into our sector. That's typically what's happened in a commodity boom. Now I understand, during commodity booms and real estate booms, interest rates typically go higher. When interest rates go higher, money rotates out of bonds and rotates out of stocks into the commodity sector. So in the beginning of this, it may be kind of slow and lethargic because they're trying to hold interest rates down and prop up bonds and stocks. So eventually, I think people are going to be, they're going to run into commodities as a safe haven against inflation. That's kind of my take on it. You guys like this content? Click the thumbs up, subscribe if you haven't, and leave comments on what you want to see. Thanks for listening. This is Finding Value.